Good morning, ladies and gentlemen. This is Clueless Trading Frank, approximately 8:40 a.m. Eastern Standard Time on March 8th, 2000, I'm sorry, May 8th, 2017. Pre-market weekly broadcast, and a quick snapshot on some very simple analysis on where the market directional bias is and where I think the market could possibly get to. And we'll keep this short term, so I'm looking at what we are looking the time frame would be this week and possibly next week. Keep in mind that we have Mother's Day coming up on May 14th, Sunday, and generally speaking, on a historical norm, we generally tend to have a up market ending by Friday prior to Mother's Day weekend. Okay. So in between, you're certainly going to see the intraday volatility, the intra-week volatility, all the regular structured movements up and down, and things that we have constantly seen since the lows. So that's nothing unnatural, but to keep on jumping on every tick and being nervous on every little minor uh, reset pullback, I don't think would be too conducive or helpful for traders to maintain their profits and stick with their trades. Keeping saying all that, volatility can get severe at certain times, as we have seen repeatedly. So profit management is key. You can always get out of a position, take your profits out, or take a lot of it out and then leave some in there, but then re-enter back again. My work constantly has been delivered on a very timely basis, and as we can clearly see here from the chart behind that I've been showing repeatedly since the lows of the market, the recent lows of the market of April 13th, just prior to tax day, 2017 tax day, which actually fell not on the 15th but on the 18th because of the weekend. We can clearly see here that my predictive analysis on the markets have certainly come to fruition. So there's nothing that I need to prove to myself or to anyone else, given the fact that I have been overall extremely accurate with my market analysis as well as individual stocks. It is really up to the individual trader to exercise discipline with their profit management and how they need to maintain their positions throughout this ongoing intermediate bull market that we're going through. So I'm going to keep this simple and rush through and go and sort of go through a bunch of charts as quickly as possible with my comments. So this is one of the most important charts that I've shown repeatedly, which is the follow through days, starting on the 13th. As we saw, we came down pretty hard for a bunch of days, and it certainly looked like the market was going to fall lower. However, the market decided to turn at around the 23.28 level here on a little bit low, yeah, 23.28 on the S&P 500, which exactly correlated with the opening price of the 27th of March. Right there, you can see that. That's why I have this pink line here, and was that was for the point where the market actually had that reversal. If you look at this large bearish engulfing candle, it certainly didn't look like the markets were going to turn. But if you recall, and there's nothing to recall, you can certainly go back and look at my posts and my alerts and such. On that particular day, we were buyers of the market, and it certainly paid out very well. And a follow-through day is quite simple. You can learn the exact definition on Investopedia, but it's basically the fourth day from a large drop or an intermediate low. We don't know that's a low, but on the fourth day, if the market has a higher, it creates another bullish engulfing candle after reversing on the second day, then you generally have a follow through. That is exactly what's getting played out now, and we touched overnight. Right after the French elections, we touched the E-minis or the futures did touch the highs, and we are slightly down, roughly a point or two on the S&P futures from retesting a new high, a new ATH or all-time high, which I've been predicting for weeks now. So in effect, the pattern completion is complete because once the follow through, they gave the ultimate buy signal to stay long, and we stayed long all the way from here. But that was it. That was the real technical trigger. There was the first round of the French elections. We played that very successfully, and then you had the market moving sideways within a tight band of roughly around 2377 and 2390. And then on the cusp of the French elections on Friday at 3:45 p.m., this past Friday, the market basically ramped. Now the E-minis that I'm going to show in a minute are obviously going to show that clearly. This is S&P 500. You can clearly see what's going on. So very simply, on the upper end of the target, you're looking at around 2520 and maybe slightly higher. So that correlates into roughly 100 to 120 points more on the Dow Jones that we could have maximum traction acceleration at this point. In the meantime, we can certainly pull back a little bit and retest this yellow line, that's the 5 SMA, or we can come down and test the 2382 level or so, which is a retest of this uptrend line. All that is very possible. So in other words, you could have a pullback like this before we move higher. If we do break the 2380 level or 2377, this is of vital support and critical support. You are going to test the rising 50 moving average at around 2366. All these are built into the market. That's what structured volatility is all about. That's what I act on, encourage traders to basically act on it. I am not asking people to be PhD in technical analysis. I'm certainly not. But when I'm posting charts, they should at least understand what they're looking at. Because if you don't, you're not going to manage your trades right. And many of you suffer the problems of that repeatedly. People who have taken advanced coaching sessions, people who focus more and try to learn from these video casts tend to do a lot better than people who just randomly trade the market and then wonder why they're not taking profits at the right time or getting in at the right time based on the alerts. So this is 2360 is or slightly higher, maybe 2362. This level here is critical support. If we break that, we're going to retest the downtrend line, which is this dotted line right here at 2350. So that's the downside picture. Upside picture is that we basically pull back a little bit, give or take maybe 50 points or so, then move higher, break above this, which we overnight did, and create that 2410 and 2420 plus type of movement, which hits the upper end of the channel, and I believe that'll cap this leg of the rally before we have any type of strong pullback. Now, if we take this, if we put this in the context of the futures, we're going to see, and I'm going to zoom in, and this is a chart that I've been showing for a while now. We broke through this range. S&P futures at 415. That was the last minute that you could sell the SPX options, the ones that were bought at around $4. Yeah, around $4, 390. They ramped up at this point. You can see that. Okay. Well, this was basically with where the futures were before, and this was 8 sorry, this was Sunday on the heels of the French Macron win, presidential win. This was Friday. So those futures, which sorry, those options which I alerted at around $394, they went to roughly 750. Okay. So they went from roughly between 4 and 5 to 750. So that's almost 50% on the money in the last, not to mention, in the last 5 minutes after the market closed. Okay, and if you look at the lottos, which were 50 cents, they were sold around $1.50, $2. They went to almost $5, which if somebody played the lottos and left a little bit out there, they would have got a humongous gain on their money. That's just the way it is. This squeeze basically took care of this megaphone pattern, blew above it. This was the Macron win. This was Sunday, 6 p.m. when the future started trading. And this candle is a bearish engulfing. I would consider that to be a spinning top, naked bar, retracement candle. So that is a negative. So at this point, this is where we are. The trading range that I constantly kept people to buy on the tactical lows here played out. So now we'll see. There's nothing wrong with the internals. In fact, the internals are suggesting, if you look at this, that we are going to go higher. This is the 1 hour view. So it's better for swing traders intraday, or not the 5-minute type of traders. I don't like necessarily looking too much at the 5-minute screens because they're way too noisy. But it's good to peek at them sometimes, but not follow them crazy because you'll never hold your positions. So this is telling us that we do have room to move higher. At this point, we would need to break out over, and I'll put all this out before the market opens. We would need to break out over the 2397 level right there. This looks like a short-term top on the market, the 2404 level or 2403.75 on the E-minis, mind you. That translates into a retest of the all-time highs, in fact higher than the this is roughly about, it translated into S&P, that's roughly about 2409. So that's above what the 52-week high on the SPX was. So we've already satisfied the upper end by kissing the all-time highs again, pre-market, after when the future started trading on Sunday, yes, last night. So at this point, this is going to be the range, and as long as we hold above the 2388 level on the E-minis, the market looks like it wants to continue its uptrend. However, if we do break this zone here between 2385 and so, you can see that clearly on your screens too, we are going to fall again back into this trading range that we were trading in for a good solid 10 days. There you go. All this has to be taken into the context of what you're doing on the outside with your individual stocks. And for SPX traders, this is critical. Let's move on. So basically, just to finish off this particular chart, the upper end is 2410, which translates into 2415 or so on the S&P 500. Correlates with what I just told you on the SPX chart. Let's take a look of the Qs. This is the NASDAQ Tech ETF, and you can clearly see here this is on a major uptrend. The upper end of this on a swing basis. This is a daily chart. I'm not showing you what's going to happen in the next 5 minutes. Is roughly around the 140 level. I believe that culminates as, with a couple of the leftover big names on the Qs on the NASDAQ text arena coming through. Priceline being one of them. Okay, you can clearly see that. That's on a major uptrend. There's no question about it. You can even draw this line here, and you'll see that it hits pretty much the 139 level or so. This is your acceleration channel right there. And any break of that would basically pull us down, and there are multiple gaps here to fill, so that's normal. But the overall swing picture shows us that the Power Shares QQQ wants to go higher. Let's take a look at the IWM. This is one of the more interesting charts that I highlighted on Friday, and I think has to be taken note. That is a powerful reversal hammer. Okay, off filling the gap. There's your gap. Let me get this drawing tool. Here's your gap. It filled the gap. It turned, and then on Friday, it basically created this nice little hammer reversal, which means that it possibly has a shot to get up towards the 140 plus level, which will translate, and has already translated into nice serious profits. And if we look at it, the RUT calls that I put out there at roughly $7 or so, they closed at 10 on Friday. Looks like there's going to be a little bit of a pullback first thing this morning, but that's standard stuff given where we are. But this from a swing perspective is pretty solid. The lower end is 136 on the IWM, translates into 1360 or so. And the upper and this wide uptrend channel is intact. So people who are looking at the IWM and the RUTs, as I alerted, should be cognizant of this chart and keep a close eye on it. The upper end is 144. I'm not even thinking of that. But this is pretty constructive here. The support at 137. If it breaks that, then it's going to test 136. And that's it. That's the story with the Russell 2000. Let me drag in the chart of oil, which I found, which I did call very correctly. And I believe that, let me try to put this in here. There's your oil chart. Okay. So what are we seeing here? We're seeing a massive, massive hammer reversal off this particular, the November 29th lows right there. Okay, it almost got to the 42 level. It didn't quite do that. That would be fantastic. This would have been satisfy all the parameters of a major double bottom. Didn't do that. Maybe because everybody is looking at it. But all I know is the fact that this chart is drawn to perfection. You see the downtrend channel lines. You see where we turn. This is a major hammer reversal with volume. That says a lot. Just simple stuff. You got a double bottom on the stochastics. That's a plus. And every time the stochastics came down to these levels, and you don't need to be a technical genius to figure this out. Just see what I'm showing. The market has the oil has turned. It doesn't mean it's going to go back and test the 55 level. All it is that it's going to jump. It's possibly going to go over this previous support, which is now resistance. And I'm looking at roughly the 48 plus level, 48, 49, possibly 50 plus on oil. That'll translate into some very serious profits on the oil ETF, GUSH, EOG, or any pick on the oil side that you want to make, which is elastic to the price of oil. In other words, correlates and moves with oil prices. There are some fundamental news, macro news, which is pushing oil, that Iran now wants is ready to go along with all the oil supply cuts, export cuts, and they want $55 oil. So whatever the case, not like everyone's going to listen to what Iran's saying. Saudi Arabia is also in the same boat with putting out press releases that they want oil higher, and they will continue with the extension of the cuts, which is all positive. On a short-term basis, I think oil is ready to move higher. This is a daily. You are going to see back and fill, and you can see that clearly this morning. See that red candle, which is getting rejected off this downward sloping 5 SMA, and we have to keep an eye, because if it suddenly drops again and retests the 44, then again it becomes another buying opportunity. Whichever the case, if this particular candle by the end of the day stays within the body of this large hammer reversal, that's a plus. That's called an inside day, and we should basically continue the momentum forward. But oil is very fast. It's like currency, so you got to keep an eye on it. In the meantime, I'm going to swing this the few oil things that I'm looking at, that I'm positioning in, and I believe that oil will, at this point, have a short-term bounce. So that's it for now. I'm putting this up. See you guys in the chat room. Keep your head straight. Don't get too emotional. Stay tactical. Don't go overloaded in 1 or 2 positions. Play the earnings. We have had monster winners that I do not need to keep on repeating. MELIOLAD, WING, monster, all kinds of stuff. Okay? Markets are still on an upside bias. However, we are getting overbought. Period. Just the way it is. Have a great day. Thank you for listening.